Hi, everyone. I'm Frank Malakot. I'm a reporter and an anchor for KTVU Fox 2 here in the San Francisco Bay Area. My guest is the managing director and a partner with Stockbridge Capital Group. That's a real estate investment company in San Francisco. And he's here to talk about commercial real estate and how it's been affected in our COVID-19 world. Say hi to Mark Carlson, an old Cal friend of mine and a dear, dear friend. Mark, good morning. How you doing?
Morning, Frank. Good to see you.
Good to see you as well. Well, let's talk about Stockbridge out of the gate, Mark. Tell our viewers exactly what you do and what Stockbridge is all about.
Yeah, sure. We're real estate pension fund advisors. So our clients are all institutional clients, both public and private pension funds, some of the largest in the country. And what our role is to invest their capital in a diversified portfolio of varied risks and various product types. So we do everything from real estate development to buying existing core long-term leased assets.
Gotcha.
across the United States.
Well, I know you've been in real estate for over 30 years. What have the last 3 or 4 months been since the coronavirus?
It's been a very challenging time. I think when it first hit, we were all trying to figure out what to do. And obviously we were all hamstrung as well, learning to all work from home and try to, carry on managing our buildings, leasing our buildings. And one of the biggest things that we were doing is working with our tenants to all of a sudden, many of their revenue sources completely disappeared. So, we do office, retail, industrial, multifamily. We do master plan communities as well. But, when COVID hit, all of our tenants were hit with a stun gun too, trying to figure out, hey, should I withhold my rent because I may need it to keep our people employed and keep our business going.
Right. Well, let's talk about some of what you just mentioned, some of the different real estate out there. How about hotels? Do you own hotels, and how have they been affected?
Yeah. So obviously, the hospitality hotel industry has just been absolutely crushed. Values have probably been, cut in half. But the reality is very little is even trading right now. But occupancy levels went from, probably 80s to the 90s down to some cases zero.
Right.
And how can they, continue to go on? Even look at Marriott, the whole Marriott chain, they've been absolutely devastated. So I think there's going to be opportunity to buy there. But I think that it's going to take a while for people to be comfortable to get back on the road and traveling and staying at hotels.
Well, I know you'd be hard pressed to find a hotel in San Francisco right now. Union Square, is huge, and they're all boarded up right now. So they got a long way to go. With that in mind, retail too hit very hard. A lot of folks now buying everything online because they're sheltering in place. What's the future of retail?
Well, that's a good question. Retail has been going through a cyclical shift even before COVID. With the increase of e-commerce and people buying the various products, everything from groceries to clothes to furniture to just about everything online, and so online sales have obviously been growing. It's been impacting the retail industry for a long time, and if you look back. Retail real estate used to be kind of the go-to super stable, low yielding, not a lot of upside, but not a lot of risk type of real estate. And you have these big, tenants in there with some, smaller tenants, support tenants for food and that sort of thing. But we would always try to buy centers with limited restaurants, limited gyms. Those are typically, non-credit type tenants. But over the last few years, it's actually, as people bought more online, it's really a lot of large businesses have gone out of business, and it's been retail centers and backfilled quite a bit by more restaurants, by more experiential real estate to try to draw people to the center to then cross shop. So gyms and restaurants all of a sudden became like the hot thing.
Right.
And then COVID hits, gyms are closed. By the way, who wants to go work out in a gym? Yoga studios, obviously they were expanding. No one's going to yoga studios or Pilates or anything. And restaurants are shuttered and now just starting to, some of them are just starting to open. But, most of those restaurants are hand to mouth. And so they need to be producing revenue every month to pay their bills. And I think if it wasn't for the government stimulus, many of them, maybe the majority of them, wouldn't reopen. And I think even some with the stimulus are not going to be able to reopen. So, I mean, you look forward. It's like even now, they're serving food outside some restaurants, maybe distancing inside, but they can't have the same capacity that they have. So revenues are going to be down. What does that mean? That means they can pay less rent. And so that's going to really impact, our investment decisions as well as just the viability of a lot of these tenants.
Yeah, I've got a good bud that runs a restaurant on Union Street in San Francisco. He's been there. He's from Italy, great Italian restaurant. It's been there 18 years. And he said, we could reopen once they give us the green light. But, I've got a dining room that holds 60 people, and now it's going to be down to 18. And how do I keep the same number of employees serving that amount of people? So some big changes ahead in the landscape there. How about industrial properties, Mark? Is that still a good investment, or has that changed much?
Yeah, well, on the industrial side, the industrial is the winner in this whole thing. I mean, and as e-commerce sales have grown and people have been buying more product online, it's been the real, the warehouse is the new retail. And so it's just been booming. We've had, despite lots of new construction across the country, vacancy rates are at all-time lows and oftentimes below 3%, below 2%, and a lot of the markets in Los Angeles and the Bay Area. It has been the poster child for real estate. So it's attracted a lot of capital for investment. The tenants, have been expanding, and post-COVID. I mean, think about it yourself. Think about, I think about my mom. My mom never bought anything on Amazon. Now she was buying everything on Amazon. She didn't go to a store.
And
Same
tell
with
them how
me.
old your mom is.
Huh?
And tell them how old your mom is.
She's 81. She is 81, and probably go to 101, but like her dad did. But
yeah.
Who Frank knows, by the way.
I do very well.
But I really think industrial is the winner, Frank, here. And post-COVID, it's for the first, call it couple months, there was big concern on the industrial sector as to how it would fare as well, just with people buying less, period. But as we sit here 3 months into this, we're back to the same pricing levels as pre-COVID. Relative to rental rates, because it was such a healthy market before, rental rates are back up to where they were. Maybe you get another month or two of free rent as a tenant, but it's basically back. And I think as we look forward, it's going to even get more pricier and be more in demand. Again, because I think it's accelerated this whole shift of buying more online.
Well, let's switch
So what's the winner?
Office space now, Mark. I know you were in leasing years ago. I look at that Salesforce tower in the city. I don't know if all the floors are rented out, but that's got to be hurting because everyone's doing this. They're working from home now. Did I lose you, Mark?
the office sector is hard of all the real estate types. It's hard to figure out really, where it is and where it's going, post COVID. I think pre-COVID, since the great financial recession, the post-COVID, the big drivers in real estate, office in real estate has been the technology related companies. And they've been absorbing space as fast as we could build it. You look at, you mentioned Salesforce Tower here in San Francisco, but now you got, Google taking huge amounts of space in San Francisco, Uber and Twitter and Facebook. I mean, they're all coming into the city, but what they've been doing, they've been growing, on average, call it 20% a year. So when they sign a 5-year lease, they take on a lot more space than they needed in anticipation of this growth. And I think one thing we're going to see going forward is the amount of this growth is going to diminish many of these companies. And so I think in big cities, San Francisco, there's going to be, even you take, COVID out of it, there's going to be a lot of sublease space that's going to hit the market. And then you got to think about just, all of us who have offices and been sheltering at home, going to the office. Are we going to go back in? When are we going to go back in? And we're all trying to figure it out, and it's not simple. There's health concerns, there's liability concerns, and those grow exponentially when you're in a big city like San Francisco, where there's not enough parking for people to park. They got to take public transportation. New York, Chicago, those are the cities that are going to get hit the worst by this. And I think, there's an argument that with social distancing, one to be 6 feet apart, that the tenants are actually going to need more space.
Right.
But I think that's really a short-term thought. And I don't think that's going to impact things very much. I think that people are going to, our companies are going to have the people come back maybe 2 days a week and do shifts, so A shift, B shift, A shift, B shift. And there'll just be less people in the office buildings. And then when there is, we do feel like it's completely safe, or there's a vaccine or whatever, then I think people will go back to the office. But I do think this is kind of a major unexpected experiment, right? People have talked about telecommuting for years. And I think what this has done is it's forced everybody to work from home. So people now have put together their little home offices, even if it's in their bedroom. And so, or even if they're, doing news from their house, I mean, it's people have learned to do it. And so they can proven to be in some roles effective. And so I think people going back, once the new normal will be probably less people in the office than before, but office space to me is not going away. People can work short term. All of us have, I know who's on my team. We've worked together for a while. I know my partners. So we have knowledge of each other, and in some ways there's just been team building because we've had to learn to work differently together. But we need that office. And I do think it's going to be more of a hub and spoke model where, there'll be more people working from home more often, as long as they're efficient. But we're going to have to, people are going to have to go in the office. And it'll be interesting to see, you've heard some companies like Twitter say, you never have to come back to the office whenever you want, or Google or Facebook, they're saying, hey, don't even show up till 2021. But the reality of it is before COVID, all those companies were trying to make really cool, creative space and provide a lot of amenities in their space, like their own little gyms, their own bars, their own food. Most of them serve food, all this really cool stuff. And why? Because it's about attracting talent. and they wanted to be the most attractive company to attract the top people. Now it's switched, and that, one way to be attractive is to say, look, you don't have to come into the office. You can work from home. But I do think this is, mostly a short-term trend. I think people will get back to the office, and I think it's just people, need that community, and they need to have that camaraderie. And frankly, for me, working with my assistant, it's much more efficient to do that in the office than trying to do it, online or by the phone.
Do you think values, Mark? Name a city. Well, you work in San Francisco, but the buildings value might go down, and certainly leasing. Those have got to come down too, because there's going to be, a lot more supply out there, right?
Yeah, I think rents are going to go down, because I think, again, there's going to be a lot of sublease space dumped on the market. Let's just talk about San Francisco. There's some new construction coming online. I think there's a lot of the VC-backed firms that many of those are all focused on their burn rate, and they are just, lowering their expenses however they can by letting people go, by not renewing their office space and working from home. But they'll be back. They're going to need a space eventually, but they will be back. But yeah, certainly in the short term here, Frank, I think that lease rates are going to go down, and that will directly impact values, because you're buying based on a revenue stream. So that, combined with, I think, just less expansion than we've seen over the last 5-6 years, and probably the weak companies are going to get weaker through this and may not continue to appear. So I think values are going to go down. We've, in San Francisco, been at record levels. We never used to think of a property in San Francisco could sell over $1,000 a foot, but now that has become the norm. But I think that's going to be reversing here, and we'll see how long. But I think the office space sector is the biggest wild card, because there's both short-term challenges as well as long-term challenges, and of course the onset of the recession that we obviously appear to be entering.
A lot of viewers are from around the country. Mark, tell us what your experience has been like. You live in Marin County, north of San Francisco, over the Golden Gate. What's life like right now for you and your family?
Well, I'd say on the positive side, there's been some really great things that have come out of this from a personal side, and I think that it's all, it's around family, and that, oftentimes when I'm, commuting in, I leave early in the morning, I come back at night, and it's even hard with the kids' schedules to, have family dinners and family time together. But we've all been sequestered at home, and so every night, I'm in the kitchen cooking, and then I'm in the kitchen cleaning, and the kids are helping. But
I'm to work.
Yeah, but it's been great. It's really been, we're exercising together. We're walking around the neighborhoods together. It's been a really special time from that standpoint. And another thing I just love, I see all these other family pods walking around, and it's not just us. It's kind of brought us back to basics. And I guess the other thing is, especially living in Marin County, it's like when so many less people are in their cars and commuting around and out, the now that has been pulled back, nature has come alive. I live on the water out here, and there's, all of a sudden there's seeing otters and all sorts of different types of birds. And it's really been a beautiful thing to watch from that standpoint. The air is cleaner. I mean,
I know
there's a lot of positive things from a personal standpoint.
Right. Well, maybe it's the Almighty's way of saying, get back to basics and love your family. I think we all work maybe a little too much, but the world is definitely changing. And Last question, post-COVID, a lot of what you see now probably here to stay, Mark, in terms of real estate. So you've had to pivot too, right? And what you do.
Yeah, well, for me, being a low-tech guy, I am used to working in the office, and if I have a problem with my computer, I'll call the IT group or my assistant to help me out, and I've had to figure that out. So in some ways, I haven't been as efficient in that regard. I think some of the younger higher tech people in our company have been very effective. I think more effective than me. But I will say it's certainly nice not having to have made the commute every day, and so that's a benefit. But yeah, I think the story has not of real estate here has not been fully written. But I do think industrial is the clear winner. Office is the biggest wild card. I think hotels will be back. Retail, I think it's going to be rough sledding, and there's just going to be less retail going forward, in my opinion. And and Amazon at this point looks like it's going to be taking over the world.
Yeah, well, they did already. And if your 81-year-old mother is surfing the net to buy her goods, that says a lot, So here we go. Yeah,
no, it's interesting times for sure.
Yeah. All right, Mark. Well, hey, want to thank you for your time. That is Mark Carlson. He is the managing director and a partner with Stockbridge Capital Group in San Francisco. Mark, we wish you good health, and thanks for giving us a little insight on the commercial real estate side of COVID-19.
All right, Frank. Great catching up with you.
As always, Mark Carlson. I'm Frank Malika. If you'd like more information, you can go to coronavirusnow.com. Have a great day, everybody.